Hello, everyone. Thanks for joining us on this Wednesday, and welcome to this specialist trading educational presentation, where today we're going to talk about 3 powerful ways to trade. These are 3 of our best methods and techniques here at Specialist Trading, and I truly believe they can help elevate your trading to the next level. Let's take a look at this chart here in YPF, okay? Now, we're just looking at 3 bars. That's all we're looking at. But with the first technique I'm going to share with you today, it actually would have been able to determine, just based off these 3 bars right here, that we were in a downtrend, okay? Just based off that. And once you knew you were in a downtrend, well, you either could avoid this downward move or look to sell. Now, coming up 3 bars later, the same tool that I'm going to share with you today would have told you that an uptrend had just begun. And as you can see later on, the stock took off. Now, the next method, that's part of these 3 that I'm going to be sharing with you today, actually generated some nice signals, because now you want to trade with the trend, right? And then the third method generated even more high probability setups as well. So this is what we're going to be talking about, 3 of our best methods that can really elevate your trading. And the best thing about all of this is that they're all easily accessible on the platform. The 3 powerful ways to trade are 1 click away on the PTS Primo charting platform that I developed with Pro Trader Strategies to make trading as simple as possible. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. We are all about educating you, as you'll see in today's educational presentation. Our goal is simply to put the power back in your hands. And the reason why most traders don't have that is because they were taught to listen to someone else or to take our cue from someone else, that's what's going to determine whether we buy or sell. But in order to become a consistent trader, you actually have to make your own trading decisions. This can't be done by anyone or anything else. It can't be done by an earnings announcement. It can't be done by a buyout. It can't be done by a jobless claim number. It has to be done by you. The good news is we provide you with all the tips, tools, and techniques you need in order to make those decisions. And you'll see that in today's educational presentation. Now, as always, before we begin, we are required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 methods, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, I invite each and every one of you, if you haven't done so already, to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. If you're new to my tweets, I post about 3 to 5 different ones a day. I give different chart examples of our tips and techniques, and I go into a brief explanation as to why they were generated and as to how they were generated. I also give little bits of financial wisdom to help you trade. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now, as I stated earlier, we are an educational company with our goal being to educate you. You see, if there's one thing I've learned in my 45 years of trading, it's that no 2 traders should ever trade alike. In other words, you can get the same setup, that there's a high probability that this stock or this future or this currency pair is going to go up, or the opposite, a high probability that it's going to go down. But there are numerous ways to enter. There's just numerous infinite ways to place your stop and infinite ways to exit. So that's what we mean by you making your own trade decision. I know we're all trained, myself included, when I first started trading 45 years ago, to have someone else force feed us signals. In fact, a funny story on my tweets this last week, someone responded and said, well, sure, this is great because you posted what had happened, but I would have been more impressed if you told us in advance what was going to happen. You see, that's a perfect example of what we're trained to do. Why don't you tell me before it's going to happen so that I can follow you and get the signals from you? That's not the way trading is supposed to be. You're supposed to make those decisions. As a mentor, as an educator, my job is to share with you things that have high probabilities for success, for consistency. And then your job is to find where those are highlighted, either in stocks, futures, commodities, currency pairs, makes no difference. So once again, people coming to my Twitter page or to our website are constantly looking to be told what to do. And once again, I was taught the same way. But once you let go of that mindset and say, you know what, I've got enough knowledge, I know what to do. I've looked at the chart and I have a clear-cut idea of whether this is going up or going down, or where a high probability entry point is, or a high probability exit point is. Once you get to that level, that's where you start to become a consistent trader. And that's our goal as a mentor. My goal is not to trade for you, but to teach you how to trade with the specialist edge. Now, when I first started 45 years ago and my mentors were teaching me the same methods I teach my students around the world, I said the same things. I said, why don't you just tell me what you're buying and I'll do the same thing? And they said, because ultimately that's going to be a crutch. And then when we're not here, you won't know what to do anymore. So you have to find your own way. The good news is we provide you with all the tools and strategies and methods that you'll need to find your own way, okay? Now, before we begin today's educational presentation, just a few announcements. Remember, this is a static PowerPoint presentation. It's not an interactive Zoom presentation, so please disable all cameras and microphones. Also, we will be sending each and every one of you a link to this recording. We are recording this, so if you have to leave early or if you're having technical issues with your computer, don't worry. We will send you a link to this recording. You can watch it whenever you want, okay? And then lastly, please save the questions till the end. I have a lot of slides to share with you. And if we stop for every slide, we'll be here far too long. So please ask questions at the end. I promise I'll get to each and every one of them when I share with you a great offer we have for all of you attending today. All right. With that stated, let's begin today's educational presentation. Let's jump right into these three powerful methods. Okay, these are three powerful ways to trade. The first method is something you've heard me speak about before. It's the PET-D. Now, this is something I learned decades ago on the floor of the Pacific Stock Exchange. At the time, though, we had to calculate it by hand calculator. It was so cumbersome, and we called it the formula. But once I teamed up with Pro Trader Strategies, we had the ability to program it and make it into a color bar tool. So if you're wondering what it is, it's a proprietary algorithm. Once again, very cumbersome, very complicated to figure out. So we've taken all the hard work out of it for you and developed it into a color bar tool. So basically, all you're looking for is a series of either green bars or red bars, because what it's going to do is determine the short-term trend. That's why we call it our short-term trend identifier. Now, most of you would say, well, I don't need a trend identifier. I know to look at higher highs, higher lows, or I know to look for moving average crossovers, or I was always taught the trend is looking at the higher time frame and then making sure that the lower time frame is in sync. That's the trend, right? Those are all well and good. I was taught the same thing 45 years ago, but they are not very consistent, all right? They're very limited in their use. The PET-D is better in identifying the trend than anything I've ever worked with or used in my 45 years of trading. So let me share with you how simple it is, okay? As we look at this older chart of BAC, all right, here's the process you'd go through. What we're looking for are 3 to 5 consecutive bars that have the same color, all right? Now here we see 3 bars. In order to find out what color they are, on our platform, click on PET-D, and the colors appear on the bars. Now, we have a total of 3 consecutive red bars in a row. Now, even though this was an up day, as you can see here, the last day was up. It opened and closed higher. That's okay. It's outlined red. That means it's an up day in a short-term downtrend. Very similar to being in the middle of winter, and every once in a while you'll have an 80-degree day in the middle of January, right? It doesn't mean winter's over. It's just an aberration. It's not something to concern you with that the next month or two is going to be hot. It's the same way with seeing an up day that is outlined red. It's just an up day in a short-term downtrend. So this is all we need to tell us that the trend is down, and look what happened, okay? So one way to trade this, you could avoid it, or you could look to go short using your strategy signal. But now, as we see as the market unfolded, now we have 3 consecutive green bars. Now, obviously, these are all up days. They open and close higher, open and higher, open higher, but they're outlined green, okay? Now, as before, these were up days, opened high, closed higher, open and closed higher, but they were outlined red. Well, these are green. So what's that telling us? The translator, the PET-D, is telling us that it wants to reverse now and go higher. Now, it's not a predictive tool. We do not know how high it wants to go or how low it wants to go. It's just telling us what it wants to do at the moment. It's measuring on a tick-by-tick basis what the market wants to do. So right at that point, you would have said, well, I'm now changing my mindset to that of a buyer's one. I'll look for buy setups. And it went up for a week or two, nothing really strong. And then once again, what do we have? 3 consecutive red bars, enough to tell us that that was the extent of the so-called bounce. We're going lower again. And look what happened, okay? So let's look at some more current examples and share with you the process of how you could have found the short-term trend using this great method that I apply each and every day to my trading. All right, here's an example in Costco, okay? Once again, we're looking at a very small amount of bars here, and they're all closing up. But we need to see what the PET-D is telling us, because that's the translator for the short-term trend. So we click on the PET-D, and we see, yes, they're all green. So right off the bat, we know that the uptrend toward the short term is up. So we want to be in sync with that, right? And look what happened. Now, along the way, we had some down days. Here's a down day, another down day, because we closed, I should say we opened and closed lower. We opened and closed lower. In fact, here, we opened and closed lower 3 days in a row, but they were all painted green. So that's just telling you a down day in a short-term uptrend, similar to the middle of summer, which would be considered an uptrend in heat. And in the middle of July or August, every once in a while, you'll have a cold day, right? It's only 60 degrees. Now, does that mean summer's over in the middle of July or beginning of August? No, it's an aberration. It just means that it's not going to last very long, and most likely it will resume its upward trend the way it usually does and goes back to 80 or 90 or 100 degrees in a week or so later. Same way with this. Just because you have a series of down days does not mean, oh, okay, that means we're going lower. They can still be colored green. Same way we had here, 2 down days in a row, we went back up. More down days, back up. Series of 3 down days, we're still doing all right? Until we have 3 consecutive red bars. Now, that is the market, not some guy on TV, not some, higher time frame looking at the lower time frame. The market's telling us it wants to go lower. And based off these 3 bars, that's all you needed to know. We're now in a downtrend on the short term. And look what happened, okay? You think the PET-D could have helped you there. Here's another example in Apple. It's a 2-hour chart, okay? So you can use this intraday if you'd like. Obviously, we've been going down. And if we apply the PET-D, we see that the PET-D was already telling us we're going down. But then right here, we get consecutive green bars, all right? That's telling us we wouldn't look at this from a seller's point of view much longer. This should be viewed upon as in an uptrend. And lo and behold, look what happened on a 2-hour time frame, all right? See how that helped you? And every once in a while, you'd have a down 2-hour time frame, right back up, a down, right back up, okay? The next example is in Oracle. Obviously, we're going up. We're in an uptrend, obviously. We apply the PET-D. We see in hindsight, sure, it was telling us well in advance back here we were going higher. But at this point, towards the high, we have 3 consecutive red bars telling us that the market wants to change direction. And look what happened, all right? Now, remember that opening chart we shared with you in YPF, okay? How do we do that process? How do we come to that conclusion based off those 3 bars? Well, first thing we do is apply the PET-D, all right? Right here on our platform, click it on. And we knew right well ahead that we had 3 red bars. So we knew that the trend was going to be lower. Now, you have a decision to make. Remember, it's all about you deciding. We're putting the tools in your hands so that you can decide. You know, you don't just come to my website saying, Steve, what should I buy? What should I sell? Those were what other so-called educators do. And you've come to the wrong place if you think I'm going to do that. Remember, a good mentor does not trade for you. He teaches you how to make your own decisions. So I'm presenting the PET-D right here. What would you have done? If you were long this, what would your decision have been? Maybe to raise your stop, maybe to exit half of your position, maybe to exit everything altogether. Or maybe if you were thinking about getting long this, maybe some guy on TV said, you got to buy this. This is a morning star pattern. This is fantastic. You would have known, no, my decision, this is in a short-term downtrend. I'm not going to buy this. Wise decision, because look what you just avoided, right? And if you were long, you saved yourself some money. But you still like the stocks. You're waiting for a sign that it's going to go back up. Are you waiting for the earnings? Are you waiting for some so-called guru on TV? Are you waiting for your brother-in-law down the street to tell you that you got to buy it? No, you're listening to the source, the chart in front of you, to make, once again, your own trading decisions. And what happens? We have consecutive green bars. So rather than listening to some guy on TV or the economic news or the jobless reports, you know this wants to go higher. I don't care what anything else is saying because they really don't have high levels of consistency. This wants to go higher. It's signaling based off these 3 bars that we're in an uptrend. And look what happened, okay? So this is how simple trading can be once you have the tools and the information to make your own trading decisions. But up until now, we've just been talking about the trend. The first method, the only thing it does is tell you the trend. You will have a high level of consistency if you trade in sync with the trend. But in order to trade, you need some structure. You can't just say, well, hey, there's 3 green, I should buy at the market, right? No, this is not a strategy. This is not a system. This is just a trend identifier. You know, after maybe 5 or 6 bars, it may go lower. So you need some structure to tell you a high probability point of entry. That's where we get to method number 2. We're going to be talking about strategy number 4. This is the first strategy my mentors taught me when I was struggling and something I currently use on a day-to-day basis. I have continued to use it now for over 4 decades. Let me give you some of the highlights about this strategy. It's a pattern recognition strategy based on a pattern that appears in any market, in any time frame, in any direction. And this pattern reoccurs over and over again. Once you know how to spot it and how to identify it, which we teach you in the course, you'll see that it's all over the place. It's unbelievable. Some patterns are better than others. Some have a higher probability than others, but we teach you what to look for. It's originally designed for traders looking to identify momentum in advance. So what does that mean? Well, one of the beauties of strategy number 4 is that oftentimes when it looks as if the market is doing nothing, when it's going sideways, it will generate a signal. You'll see this pattern and you'll see the setups for either a buy or a sell signal. So where everyone else is saying, hey, that stock's not doing anything, or that future is not doing anything, or that commodity is not doing anything, strategy 4 may generate a signal where you can jump in well in advance of any type of other signal, all right? Now, it only uses one indicator because it's based on a pattern, and that indicator is the 50-period moving average. That will tell us whether we're a buyer or a seller, meaning if price is above the 50, we're only going to be a buyer. If price is below, we'll be a seller. That's one of the main rules of strategy number 4. So let's look at some older examples here. Here's one in ODFL. We're above the 50-period moving average line. Okay, so we're going to be looking for buy setups. Looks like momentum is going lower, right? We shouldn't be buying this, but strategy number 4, if we check on the platform, in the drop-down menu, click on signal arrows, and yeah, right at the bottom there, there's a buy setup. And in the next 3 days, it generated a nearly 32-point gain, okay? Here's another example on REGN, Regeneron, all right? We're below the 50, so even though we've had a nice little run up here, this is a bounce in an overall downtrend. So this should not be looked as something to buy. This should be looked as something to sell into, because the overall trend is down, we're below the 50. And you think there's a sell signal because we teach you what to look for. In order to check your work on our educational platform, you just click on strategy 4. In the drop-down menu, click on signal arrow. And guess what? You're right. So this is how you are learning through our educational platform how to make your own trading decisions. You're learning how to identify a setup, and then you check your work on the platform. And that would have been a wise decision to sell this because it dropped 50 points coming into August last month. Here's an example in SMPS where there were 2 buy signals generated, okay, right next to each other. You could have decided to take any one, and 70 points coming into last month, mid-month. Another sell example in ASML, okay, we're below the 50-period moving average. Someone say, but Steve, you know, I thought this was a bottom here. Look, we had a real nice upward move. That chat room I go to says you got to buy this. It's going to be explosive to the upside. I bought the calls. First thing you ask yourself, if we're below the 50-period moving average, am I a buyer or am I a seller? You're a seller. You will have a higher level of consistency if you use that simple rule. A sell signal was generated here using strategy 4, and 90 points in 1 week. So what happened to the big bounce? What happened to the making of new highs? Please, if you only learn one thing, it's to really start to try and make your own trading decisions. That's why we don't have trading rooms or chat rooms at Specialist Trading, because we would be doing you a disservice by creating a crutch. Once again, the entire industry, as I always say, is based on you going somewhere. That's how they make money. And they just force feed you signals. And you're basically just addicted to getting these signals on a nightly basis. and you have no idea what they're based off. You don't have any idea if they'll work, but you figure, hey, this guy's supposed to be good, right? So I guess I should do it. You have to get to the point where you have the information, which we provide you with, and you can make your own decision where you want to enter, where you want to exit. Now, this one sell signal right in front of you in ASML, there are dozens of ways you could have entered. You could have entered at the market. You could have placed a limit, which we teach you a strategic place to do that. You could have used our confirmation method. You could have used a number of different ways to enter. You could have exited at a number of different places. This is what you have to instill in your trading. You cannot simply go to a trading room or listen to some guy online tells you where to buy and where to sell. In my opinion, that's a recipe for disaster. Okay, so you've seen the high probability trades of strategy number 4. Do they work 100% of the time? No, but it's extremely consistent, meaning that every once in a while you will have a loss, but most of the time it's able to recoup those losses. Now, another extremely consistent method is our third in our 3 powerful ways to trade, and it's based entirely off different rules, entirely off different requirements, and this is strategy number 5. The reason why it's different is where before strategy 4 was based off a pattern, strategy number 5 is a non-traditional candlestick method for all candlestick patterns, okay? It totally goes against everything you've been taught by trading candlesticks. It's mainly for continuation traders. Continuation traders are the kind of traders that see an upward move and where everyone thinks, okay, that's enough, it's gone too high. A continuation trader is able to identify that there's more room to squeeze out to the upside or to the downside, okay? Once again, it only uses one indicator, the 50-period moving average. Tells you whether you should be buying or selling. So here's some examples of strategy number 5. Most traders would say, hey, yeah, it's looks okay, but I would have rather bought down here. It's already in a nice uptrend. I don't think I'm going to buy here. Maybe there's resistance at this point. But strategy number 5, if you check the work, same thing, apply the signal arrows, would have noticed that there was a buy signal right at the very top of that bounce. And you were able to squeeze out an extra 11 more points had you taken that signal. Now you look at ZTS, looks like it's going lower, right? Just kind of a small, steady downward move. So you don't want to buy anything. That guy in the chat room says it's going to go much lower before it bounces. But guess what? Strategy 5 generated a sell signal, which should have a high probability it's going to move a lot lower. And we went down 15 more points before it bounced. All right. Here's an example in PSA. Been steadily going higher. It looked like it was going to go lower and then bounced up again. You say to yourself, wow, okay, I can't buy it here. I wish I would have bought it down here, but that's okay. You could have still squeezed out an extra 25 points using strategy number 5 and its unique candlestick approach. Looking at OKTA, kind of a down to steady sideways move. Not really much showing here, but look what happened. 36 points to the downside. And it's funny how 4 days before this gap down, a sell signal was generated. So the candlestick pattern using our non-traditional approach was able to identify this well in advance of some news event. All right, so let's recap the 3 methods we talked about. You're going to need to determine what the trend is, all right? The trend is the most important thing. Think of it. When you lose, it's not so much that you have a faulty strategy or your system is not well, or maybe you're just not experienced enough. It most likely is you're out of sync with the trend. You're buying when the market you're trading wants to go lower, and you're selling when the market you're trading wants to go higher, right? That's really just it. It doesn't get any more difficult than that. So obviously, the first thing you need to do is to get in sync with the short-term trend. And the way you do that is with the most powerful tool I've seen in 4 decades, the PET-D. Remember, this is something I was introduced to on the floor some 4 decades ago, and we had to calculate it on a hand calculator by hand in order to come up with the calculations. We've done all the hard work for you. It's a color bar tool. You're just looking for a series of either green bars for a short-term uptrend or a series of red bars for a short-term downtrend. That's it. Once you know the trend, then the next step is to trade in sync with that trend. But remember, you can't just simply buy or sell at the market. That's what they tell you to do in chat rooms or in trading rooms. We don't believe in that. You have to have some structure. The market has to form a pattern or some type of high probability setup telling you it's okay to get in, to buy, or to sell. Well, the second best way to do that, we know, is through strategy number 4. Okay. Strategy number 4 is a pattern recognition strategy I've been trading almost on a daily basis for over 4 decades. I was introduced to this by my mentors, and that's how powerful it is. Extremely simple, but you need to identify that pattern. The good news is we teach you exactly what to look for and all the different ways to trade it in the course. If you want another method to trade with that is totally different from strategy 4, it's mainly trading in continuation with the trend, where you thought, well, maybe this is too high, it's not going to go any higher. Oftentimes, strategy number 5, our non-traditional candlestick method, will generate signals at the very top of a move that it's going to go even higher, or at the very bottom of a move that it'll go even lower. So 2 entirely different methods for trading in sync with the PET-D. When you combine all 3 of these, you get what we call our triple threat of trading. Why? Because they are so powerful. These 3 methods are so strong and so consistent. They're basically a triple threat. You have 3 great ways to trade the market. Now, I don't want you to think that this only works for stocks. Let me show you the process in other markets and other time frames. Here's a 4-hour chart of the Australian dollar, just going back this past week, all right? Obviously, we were going higher here in hindsight, and then we hit a snag and started to head much lower. Once we applied the PET-D, we see that it caught it perfectly, okay? So we only wanted to be a buyer when the market was going up, and we only wanted to be a seller when the market was going down. So we could apply our strategies, all right? Here's the strategy number 4 buy signal. Here are two strategy number 5 buy signals. Quickly reverse into sell signals, okay? So not that everyone would have worked out. Obviously, these first 2 would have been better. This last one wouldn't have done so well, but you would have recouped it with these. This is what we mean by consistency. A consistent method is one that's able to recoup the losses. Here's another example using that same process in Bitcoin. Here's a weekly chart going all the way back to the beginning of the year, coming into this last week, okay? As we can see, and I'm sure you all know, Bitcoin has been steadily heading lower. It's just every day goes down more and more, or on the weekly basis heads more and more to the downside. Would the PET-D have caught this? Well, if we apply the PET-D, it was telling us well in advance, 3 consecutive bars. These are weekly bars, but that's okay. At the end of last year, it was telling us there's a downtrend. Don't you think if you're a crypto trader, you would have liked to have known that on a weekly basis? Let's say you were holding and you had a nice profit. Don't you think, well, hey, you know what? Maybe I should sell or raise a stop, or maybe exit a portion of my position and take some cash out. I've got a nice profit. Because most likely if you held on, you're giving it all back, right? And that's what most traders do. That's why most traders lose. But knowing this information now, you would have gotten out of your Bitcoin, or at least sold some, or maybe said, hey, I'm not going to buy anything right now. All 3 bars are red. And here we have a green bar. But remember, you need at least 3 consecutive green bars to tell you it's going back up. So that was not enough for us to change our mind. And we continue to head lower. Here we are coming into this last week. Now, if you wanted to add some sell signals to go short, well, look at all these sell signals, strategy 4 and strategy 5 to help you sell Bitcoin, okay? Here's a 1-hour chart of the spiders. If you're a daily trader, intraday trader, once again, we're kind of going higher, and then we head strictly lower. How could this have helped us? Apply the PET-D, and we know that from this point on, we're only going to be a buyer. Once we change to consecutive red bars, we see that we have a couple of splatterings of green here, but not enough to tell us the trend had changed. Remember, we need anywhere from 3 to 5 consecutive bars. We have 1 green bar here, another 1 green bar, and then 2 green bars. We need at least 3 green bars in a row to tell us the trend had changed. So therefore, you still could have looked for sell signals. Once you added strategy 4 or 5, do you think they could have helped you at all? Now, there's one thing I want to share with you. These are all strategy 4 signals with the up arrow, and here with the kind of arrow head, these are strategy 5, and these are sell signals. A buy signal, strategy 4 buy signal, was generated right here, okay? Obviously, it didn't work out. Now, how could we have avoided this one altogether? This is one thing we teach you in the course as well. In order to buy, remember, you need to have a buy signal in the green area where the bars are green. You cannot have a buy signal if the bar is colored or outlined red, the way this is. So therefore, you would not have taken this signal. It would have filtered out by the PET-D telling you don't buy. It needs to be green in order to buy. And you would have not had a loss, and you would have waited to go short on this one. Trading is simple when you are in sync with the market and you have high probability methods that reflect what the market wants to do, that don't try to pick tops and bottoms and don't try to predict that the market will go no higher or will go no lower. No, you have methods that are in line, that are just basically jumping on board what the market wants to do. That's how you become a consistent trader. So ask yourself, do you think these three methods could have helped your trading in this past year? Most likely your answer is yes, right? If your answer is yes, or if you've been thinking, if you're on the sidelines thinking, well, yeah, I guess it could have helped me a little bit, we have a great attendee offer and a great discount for all of you today, all right? We're going to offer you our triple threat special. That's strategy 4, strategy 5, along with the PET-D tool. You're going to get instant course access. In fact, you can be up and running as early as today. You'll get detailed instruction on how to trade all three of these, 3 together or separately. You'll know exactly where the entry points are, all the different entry points, all the different exits, all the different stop placements for you to choose. I know a lot of people say, well, gosh, Steve, I haven't been trading that long. I don't really understand a whole lot of this. That's okay. We have beginners who have been trading maybe 2 weeks that trade these and have become consistent traders. You can decide by us helping you. Let's say, for example, you haven't been trading that long and you know, though, that you don't like a lot of risk, or maybe you have a small account size. Well, great. Then we can share you ways how to trade with a small account size or with small risk. Let's say you have a large account and you say, hey, Steve, I don't mind big risk and I like to stay in the trade for as long as possible. Well, then we can show you ways on how to do that. But ultimately, you're in charge. You're making the decision, not us. We're just highlighting with a spotlight a high probability for entry, okay? So you'll learn all the entries, all the exits. You also get a conservative as well as aggressive version to learn. On top of that, with the PET-D, traded separately, you'll get 4 PET-D trading techniques. These are techniques that highlight high probability entries based on the PET-D only. Really extremely valuable. A lot of our traders only trade this. It's that powerful, and you're going to get that as well. This also includes a stop placement method as well, okay? You'll get educational correspondence, and on top of that, we're going to add something else. Here's an extra bonus for all of you attending. We're going to throw in a full year of the platform. Now, that costs close to $1,800. We're going to cut that price, slash it down to 0. You're going to get a full year of our platform absolutely free, just for joining the triple threat special, okay? Now, included with the 12 months of the platform, obviously you'll get strategy 4 and 5 and the PET-D instant access, just clicking on the tabs there. But you'll also get our proprietary buy-sell line, which instantly tells you the overall trend in 4 different displays. You'll get a scanner. You can scan for each and every one of these 3 different powerful methods individually on a nightly basis, even intraday. We provide you with the data for different markets like ETFs, overseas markets, for the NASDAQ, for futures, for currency pairs, for cryptos, okay? So you'll have all that data to scan for if you'd like. A strength of trend tool I developed with Pro Trader Strategies that has an uncanny ability of telling you when a trend is just about to run out or start up again. And auto-generated exit levels. Here's one of our exit techniques that has been displayed on the platform. With one click, you'll automatically know where to exit, okay? This is just one of the different ways to exit. All of this, along with a host of dozens more techniques and methods, are on our platform for you to choose from, okay? This all comes with your free year of the PTS Primo charts. Now, if you're still not convinced, let's go back to that opening chart I shared with you on YPF. Let's share with you the process in hindsight. Remember, once again, as we see here, it was going lower and then quickly reversed and went up. How could we take an advantage of that? Well, first thing we do is apply the PET-D, all right? And I know this is in hindsight, but you would have known just by applying the PET-D off these 3 bars right here that it was going lower, that you didn't want to buy this, or maybe you were going to short it or whatever. It's a $5 stock, so I don't think you would have shorted it, but you would have stayed on the sidelines and waited. Now, at this point, that's the time to start looking for buy setups. So the first thing you want to do is apply a strategy that is in sync with the green bars, the trend. Strategy number 4, okay? So you could have clicked on strategy 4, and look at all the buy signals you would have had. Now, you had one sell signal here that obviously you most likely would not have taken because it's an inexpensive stock to go short. But once it went up, look at all the different places you could have taken advantage of. Now, let's say you wanted to use another strategy or both in combination with strategy 4, strategy number 5. Click that on. And look at all the signals here. Obviously, another sell signal here, because it will just post anything where the setups are generated. But look at all the different buy signals in the dark green arrowheads, okay? So this is showing you how simple it is to use this process, but you'll only get this by using our triple threat on our platform. As you see, we made it simple. Everything is one click away. But remember, these are not black boxes. We teach you how to identify every setup. We've just made it simple for you on the platform. There are 3 powerful ways to trade, and you'll have complete access to this with the special deal we have today. Okay, so let's break it down. You're going to get strategy number 4, candlestick strategy number 5, and the PET-D, early trend detector. Now, normally, the strategies would cost roughly $695 each, close to $700, and the PET-D, because it's so powerful and has so many uses, would be close to $5,000. So altogether, individually, we're talking about close to $6,400. Now, if we applied the full year of the platform, we're talking close to $8,200, okay? Now, obviously, we're not going to charge, that's not the special I have for you today, $8,200 or $8,150. We're going to cut that dramatically. Here's what we're going to do. We're not going to charge you for the platform. We're not going to charge you for the strategies. We're only going to charge for the PET-D, all right? You're going to save over $3,100, but we're going to take it up a notch even more. We realize that $49.95 is still difficult for many traders to come up with. So for a limited time only, we're going to offer payment plans. That means you don't have to come up with $49.95. You can come up with a small fraction of that and establish a payment plan, and you can still be up and running as early as today. So this is a great, great offer to have the triple threat in your back pocket to start learning how to trade these 3 powerful methods that you just saw some recent examples of how well they can work for you. Remember, $49.95, if you want to pay in full, you're going to be saving over $3,100. If you want to establish a payment plan, well, then it's just a fraction of $49.95, and then you'll just have a simple payment every month to take care of it, okay? It's that simple to get started. Are you going to wait another year to become a consistent trader? Think about it. I'm sure all of you made all these goals at the beginning of the year in January where your trading wanted to be. Well, we're going to be heading into October in a couple of weeks. And it's almost certain, I can almost guarantee that the majority of you are not anywhere where you want it to be. That's okay. Trust me, I know what it's like. I've been there. It's okay. Take charge of your trading. Now is the time to take advantage of this. The way to do that is to contact my sister site, Pro Trader Strategies. They're in charge of all the discounts, all the tech supports for our platform. They can easily set up a payment plan for you or take your order over the phone. They can answer any questions regarding price or the platform or the strategies. Anything you need to know, I would highly suggest giving them a call at area code 310-598-6677. There's absolutely no obligation. They would be more than happy to answer any question concerning pricing and joining. Now, that link you see at the bottom is the link that will take you to the info page. You can sign up online as well if you'd like. It's also been posted on the chat box. So if you go to the chat box and open that up, there will be a live link there, and you can simply post that or click that on. It will post it for you. Okay. I'm going to leave this information up here. I promised you I would answer any questions. So if you have any, you can go to the question and answer box or the chat box, whatever one you want, and I will answer them as soon as possible. Someone is asking, what do you mean by educational correspondence? Oh, let me just backtrack and show you what that is here. We showed you, sorry, I'm kind of backing up a lot here. Because a lot of people aren't familiar. Educational correspondence means that, excuse me, you will be able to have my private email address. So you can contact me whenever you'd like. Anytime you want to contact me, anytime you want to email me with a question, maybe you don't understand the process. Maybe you said, Steve, am I doing this right? I'm not really sure. Did I access the PET-D or something right? You can contact me in the middle of the night. I answer emails over the weekend. I was answering emails this morning at before the opening. And it's just like having me there. And there's no limit to how many questions you can ask. We have questions from students who are brand new. I also have questions from students who have been trading for years. They just need a refresher, or maybe they took some time off and want to refresh things up a bit. So this is all included. It's like having me sitting right next to you while you're trading to answer any question you may have. So if you're concerned with what educational correspondence is, you get my private email address. So let me go back to the, if someone wanted to copy that email, I didn't realize I had to go back so far. So if you ever want to contact me, I'll be right there with you. Now, remember, once again, I always say this, but it's true. The emails go straight to me. They don't go to an assistant. They don't go to an intern. They don't go to a salesperson. They come straight to me. So I'm the only one seeing the email. So don't feel as if it's being transferred and around the block through people. It only comes directly to me, okay? Great question. Can this work on intraday trading? Yes, I don't know if you saw, but I posted an hourly bar chart of the spiders. I also posted a 4-hour chart. It's not really intraday, but it's still not the same time frame. It's smaller than a daily bar. 4-hour chart of currency pairs. But yes, I use this personally on intraday trading. I trade E-mini futures, so I use it on an entirely different market. On the E-mini futures, I use it on anywhere from 5 bars to tick charts. So yes, it makes absolutely no difference. It will generate signals wherever you have this candlestick non-traditional setup, or wherever you have this pattern being generated through strategy number 4. Makes no difference what market, makes no difference what time frame, okay? And someone says, do you have to go short? No, if you're the type of trader that doesn't like to go short or doesn't feel comfortable, that's okay. If you feel there's more risk, then just take the buy signal. Now, you will see sell signals generated. For example, in that YPF, I showed you a couple of sell signals that were generated, because wherever there's a pattern, wherever there's a setup, you know, the strategy is not looking at what the stock or the future is or what the price is. It's just looking at the setups. So obviously, if it's a $3 stock, you don't want to take a short, position of that, because you don't want to short anything that small of a price. But once it goes into the long phase, then yeah, you'd want to take the buy signal. So yes, you don't have to take sell signals if you don't want. Remember, this is not a system. A system requires everyone to trade the same way and to take all the same signals. Systems are entirely opposite of what we teach and believe in. We share with you high probability entry points, but then we want you to trade according to your own means. We want you to decide if you're going to enter here, or if you're going to exit here, or even if you're going to take the trade at all. Well, see, with the system, you don't have those variables. You don't have those options. You have to take the trade in order to keep the same results that the system generates. We don't believe in that. We don't think two traders should trade alike. Everyone should trade differently and according to their own means, okay? So that's the difference between us and other websites. Okay, good questions. Let's see. If there are no further questions, remember, there's absolutely no obligation. I know a lot of times people are reticent to give Pro Trader Strategies a call. They're there to help you. There's no obligation. If you're just wondering or thinking about it, you can call them and ask them about putting together a payment plan so you can think about it. There's absolutely no obligation where you have to take it or they're going to sell you something. They're there to work with you. They're very flexible, and they'd be happy to answer any question that you may have. So I would really suggest giving them a call, 310-598-6677. They can give you a quote. They can tell you what a payment plan would be, and you can decide for yourself, okay? Question, one last question. Any plans to make the platform connected to a broker? It's a good question. It's funny because I recently talked about this with Pro Trader Strategies. There are no plans that are definitive right now, but it's something we would have to think about. I was discussing it with them, and there's just a lot of regulations that we have to go through. So it's very difficult to go through that very simple and make it easy, but it still is on the back burner. So it's not something we've totally discounted. But if you're wondering about the platform being connected to a broker so that you actually can trade from our platform, meaning that wherever there's a signal, you'll be able to click and it would go directly to your broker. That is something, although not in the works, that's something that's still on the back burner that we're still looking at and trying to figure out ways to put together, okay? Okay, if there are no further questions, let's take one last look at our disclaimer. And as we do, I just want to thank you for joining us today. I really wish you the best of luck, but most especially, I want to help you take your trading to the next level. The best way I know to do that right now is by becoming a member of the Triple Threat course. You're going to get 3 of our best tools to really help you excel, and I'll be there with you every step of the way, trying to help you so that you can take your trading to the next level, okay? Thank you so much for attending. I wish you the best of luck in trading, and I look forward to seeing you in the Triple Threat course. Have a great day. We'll see you next week. Bye-bye.